impressions from the event. Can you share like what are your thoughts about WoW Summit in
Sure.
Bangkok?
Sure. So I love WoW Summit. I was there in the one in Hong Kong, in several different locations, basically worldwide. Thailand happens to be one of my favorite countries, and so having WoW Summit here makes everything super convenient. Love the brand. We just had WoW Summit on our show the other day. What they're doing is really special in terms of really getting good projects and then good speakers, as opposed to a lot of events that are just sort of, bringing company after company, whichever one is willing to sponsor and get on as a sponsored speaking slot.
Okay.
And WoW Summit doesn't really do that. Like, they're not really out there trying to sell seats and things like that, like a lot of events. So I think it's really useful.
Yeah. What's your area of expertise? What do you do in Web3?
Sure. I mean, I guess my area of expertise would be investments, tokenomics. So a lot of helping projects in the lead up to their IDO, their IEO. A lot of companies, they may be really good at what they do, whether it's building widgets or whether it's selling a particular product or service, right? But in terms of the process of getting that into a token and then structuring it in such a way that the value of the company is not accrued in the equity, which is what the standard model is, right? The standard model is you have a company and everything that's good for the company is good for the investors of the company because they're equity investors.
Okay.
Whereas if you have a token, those things don't necessarily correlate. You can have a company that's doing really well from a branding perspective, maybe even their treasury is doing really well, but what they've done is maybe not quite divided the value that they bring into a way where it's like routed toward the token, so the token goes up, right? There's times when like certain companies, I won't name them, that have done both equity rounds and token rounds, and they've raised a bunch of money from equity, and then they go off and raise a bunch of money from tokens, but there's only so much value they create, right? So that value is split down the middle, and they have essentially two masters because it's a young company. They're not going to have they're essentially cannibalizing their value in order to give money to a return to their equity investors, and then on the other hand their tokens. So what it comes down to is constructing their business model and articulating it in a way where the value is accrued in the token, and then that token will over time become more valuable.
Okay.
Like there has to be some reason why the token increases in value. Perhaps scarcity, right? So if there's scarcity and there's enough utility, then the token can only go up. So if you invest in a token, you'll do well. So that's sort of my area in terms of trying to figure out I made a lot of investments myself, both and then also previously at NFT Tech, invested in a couple hundred companies over like a 7-month period. So I listened to like a lot of pitches. I think over 1,000 pitches, like literally in 7 months, I'll do like 8-9 pitches a day.
Okay.
And so you start seeing companies and being able to sort of tell which are the companies that are going to be successful, who are the guys that have the right partners and the right exchanges in line. In order to launch a token. And launching the token can be very different than just funding a company, because you have connecting them with institutional investors, connecting them with advisors, the right market makers, the right exchanges, the other launch pads. So that's a lot of what we do, is sort of push companies through that process to get them ready to be a good token and to be a token that will have liquidity when it hits the exchange.
Yeah, makes sense. That's interesting. And like moving forward, which industries, like which niches do you see the most interesting for the next year for investors?
So I think every season it seems to be different. We had Metaverse season, AI season. I'm not even sure if it's still on. One thing that I can say is sort of passé is this Gen AI thing where companies will just implement like an OpenAI's API and then take something that's, let's say, a traditional thing and then add a layer of Gen AI on top of it and say, okay, now we have a new product. I think that narrative is completely gone. I think that there's still space for companies that are like building, the rails for AI, and I think that that's going to be essential, because you have these massive companies that control, they're only guys that have the funds basically to do the research and to fund the GPUs that they would need in order to have the mass processing they would need in order to, get these AI processing done. And so then it's not democratized, right? There's no transparency, there's no control over data, for example. How does the data come in? Who determines whether some data can be used for AI training and stuff? So like these things are going to be really massively centralized, and I think that ultimately it's going to shape up that there needs to be a decentralized option, and there needs to be an option that's owned by everybody, that's not controlled by a company. And I think there's going to be probably a few major companies that have really good solutions, and then they're going to be sort of more open source solutions. And the question is, how do you power them, and how do you like fund those in order to get them the funds that they need to do the processing, which is significant,
Yeah, great points. Thank you for for this short interview.
Thank you so much. Appreciate it.
It was
Thank
a
you for your
pleasure
time.
speaking with you.